Hi everyone, it's me, Corrie Sommers. Today we are going to talk about how to save on your home loan. You are not going to want to miss today's video. This is game-changing, life-changing advice. So whatever you do, stay tuned. If you haven't subscribed to my YouTube channel yet, I want to ask you to take a moment to click the subscribe button below, as well as the bell for updates, and I'll be right back. Hi everyone, it's me, Corrie Sommers, your local Los Angeles luxury realtor. Today we're going to talk about how to get the best savings on your home loan. I promise you this is some game-changing advice. I have actually worked in finance in the past. I started working in the mortgage industry in 2003 and worked in that industry for several years before things got crazy. I've also worked in financial planning. And so some of these things I'm going to share with you today really will help to position you to save the most you can on your home loan. So we're going to go over the top 5 things to get the best loan you can get when it comes to buying a home. We want to work on getting your credit score up to a 740. Now, this is not impossible, and this can be done in a number of ways. If you've had any credit challenges in the past, you might have looked into getting help with credit repair. So the first thing I want to really talk to you about is how your credit score is comprised, right? Because your credit score is not based on just one thing. Your credit score is based on several different factors. So one key thing to keep in mind is if you keep your credit card usage at 30% utilization, that's going to yield you the best possible credit score. And I say this having been through it, having done it repeatedly. This is one strategy that absolutely boosts your credit. So let's say you have a credit limit of $10,000. You never want to really exceed $3,000. And maybe right now you've got a $6,000 or $7,000 balance. If you can pay that down to $3,000, that puts you at the 30% utilization. You will see your credit score jump points. I mean, this is one of the most effective ways. Now, for some people, you don't have enough credit. You have always been very well in terms of your income. You make $100,000, $200,000, $250,000, maybe $300,000 a year, and you're just really kind of against and resistant to credit cards. So you always pay for things cash, or you write checks, and just pay for things flat out. You don't really finance. That can actually hurt you a little bit, but no fear. There again are ways to boost your credit when it comes to that, and that's called adding trade lines. Now, this is something you could actually do on your own, or you can work with a credit repair person. They do charge on average about $1,500 or more per trade line. It depends on the length of the trade line, the balance, and of course that utilization. But a little, trick I share with my clients is, hey, if you have a family member who's had a credit card for over 10 years, has never been late, and the maximum allowable total charge ability on that card is like over $5,000, ask them if they can just add you as an authorized user. What happens is their credit history reports to you on the next 30-day cycle. So that's just a little tip to get the benefit of an added trade line without spending thousands of dollars to do so. All right, so one other thing I really want to mention when you're working on building your credit score is never delete a trade line. What do I mean by this? Let's say you have a Bloomingdale's account or a credit card like that you haven't used in a while, and the balance is low, and you're like, I'm just going to pay this off and cut this up because I listen to so-and-so, whatever guru that deals with finance, and they say I should just cut up my cards, or I should cancel this trade line. Don't ever cancel it, because that history of making your payments on time, the length of time you've had the card open, is also a part of what helps to build your credit score overall. So you never want to just close a credit card. You never want to get rid of a trade line, okay? All right, so we're going to go into step 2. This is about your debt to income ratio. Now, this is a common term that lenders use, and what it means is they take a look at what your income is that comes in every month and what your financial obligations are, or your debts. So the debt to income ratio that most lenders want to see is about a 60-40, meaning 60% income, 40% debt. Sometimes they'll still approve a loan when it's 45% debt, but if you really want the best interest rate and the best loan products, the lower you can get below 40%, the better you're going to be. It just shows that you're very healthy when it comes to your finances. All right, so the third item when it comes to getting the best loan you can and saving money has everything to do with assets. Now, a lot of times I have high net clients that don't want to show everything to a lender. I mean, why would you? You don't want to show all of your personal information, right? You might have properties in other states. You might have several sources of income. Perhaps you work in the film industry and you have a producer role with one company, but then you also have bonuses that come on, this, that, and that. So you don't want to show everything. It is important to show your assets. So if you do have some money piled away, whether it's in life insurance policies, 401ks, Roth IRAs, investment properties, you want to show these things, because the more assets you have that you can show the lender on paper, the more they see you as a low risk loan. And when we're talking jumbo loans for $3 million purchases or $5 million purchases, having those assets truly help you to be able to save the most money on your loan overall. Now, this fourth point is very important, and this is all about who you work with. So I say that because let's say you have a strong income, you make $500,000 a year. Do not go and work with a brand new loan officer. And I don't say this to disrespect anybody or to say that there aren't some very bright and talented upcoming loan officers, but when you are bringing in that level of income, $500,000 a year, $1 million a year, you want to work with someone who's very seasoned. I would prefer to see you work with a loan officer who's been in the business for 20 years minimum. If not 20, definitely 15. And one of the ways that you can really rest assured that you're working with the right person is to talk to the real estate professional that you trust and that you've hired to help you with this journey. Because every real estate professional has a number of lenders that they've done repeat and continued business with, that they really know who's got that right background. They know which loan officer has been doing this for over 20 years. They know which lender is really going to go the extra mile for you, make an exception for you, will fight to keep the deal together when a monkey wrench happens. And there's always something unexpected that happens in the process. So it's just really, really important when you are at this level to work with someone who is experienced. And if you don't already have a lender that you know and have a trust relationship with that's been in the business for over 15 years, talk to your real estate professional. This is so important, and believe me, this is going to help save you money. Point 5 kind of piggybacks on point 4, which is you really want to work with a seasoned professional that has a working relationship with your real estate professional. That's kind of part of what, I'm sorry, I'm kind of overshadowing the point. The point is, you do not want to work with a lender you find online. You do not want to work with a lender you find online. You do a Google search, and whichever national company is paying for the most advertising is going to pop up, like Quicken Loans or somebody like that. They're not necessarily equipped to help you. The reality is, most of these online lenders, they're like chop shops, and they're about volume because they want to get as many people through the door so that they can just get the little bit that will stick. They're not really going to come through. They tend to overpromise and underdeliver. And it's really important when it comes to saving money on your home loan that you work with experienced professionals that know products and have relationships. And believe me, Loan Depot or Bankrate or Quicken Loans, they're limited in what they offer and what they can do for you. You are far better off working with a seasoned person. So again, like I said on point 4, if you don't have a lender already and a loan officer that's been in the business for 15 years or more, talk to the trusted real estate professional that you have decided to work with on this journey. They will help you connect with the right person so that you save the most money on your home loan. I hope all these tips have been really helpful to you. I want to thank you for watching today's video. If you haven't subscribed to my YouTube channel yet, please take a moment to click the subscribe button and the bell for updates. And guess what? If you look at the links below, I have a couple of guides for you, including the 5 top things that you can do to save the most money on your loan. Thank you guys so much for watching. See you next video.